Let's do some more calls. CLSA initiates Micron today. Outperform 155 is the target, quote, riding the crest of the AI wave. Bill, you own the name, a name that doesn't get discussed all that much, to be honest, when we talk about the AI wave.
Not discussed enough. I mean, this name, I've loved it for a while, and it's been in our portfolios. High bandwidth memory, faster computing, more efficient computing at a lower power consumption. It's going to be critical here in the AI race. And they're very well positioned, the center of it pretty much, to capitalize on it. This name trades at 9.5 forward and just grew earnings 200%. I love this name. I think we're going to continue to move. Now, it trades like a commodity. This thing moves fast.
Well, look at the year to date.
Yeah.
I mean, look at the year to date. For a name that you said not talked about enough, trades at 9.5 times forward, is up like 40% year to date.
Yeah.
Why isn't the story more known?
I mean, we've known it. We've been talking about it internally. It's right outside our top 10. Sizing this name is really what's important. Last year, we got it right outside our top 3. We held it with about a 4%, and we even trimmed it at 150. But the thing was almost cut in half. I mean, it trades very volatile. For us, it's a long-term story, and I mean, really, this thing, I think it could exceed on the next move, exceed 150. Just patience and sizing it properly is going to be important.
Yeah, it was down like barely north of 60, and here we are at 118.
Yeah.
DoorDash reiterated buy today, 305. Loop Capital, while valuation leads gig economy peers and the stock is not cheap, we think that with superior growth, considerable earnings power beneath ongoing investment, open-ended opportunity, and best-in-class management, premiums warranted. Joe, you agree?
Excellent note. I fully agree. That's a great description of what's going on here. August 7th, 278 post-earnings high. Stocks pulled back right into the 50-day moving average. I think it's a nice setup here to purchase a company that's got 30% revenue growth.
Amer Sports upgraded to buy today. $50, the new target was 38. And that's at HSBC. Bill Baruch, you own the name.
Yeah, we love this name. Really good for our consumer cyclical exposure. Love the portfolio of brands. Everything from Solomon, Arc'teryx, Louisville Slugger, expanding with some brick and mortar, even in Soho here. I saw they opened it last year. This name is going to continue to expand in the pickleball discussion here. They own Wilson as well, so I think it's a great one.
All right, Morgan Stanley makes some biotech picks today, which they suggest going global. It's at a pivotal moment, they say, as China transitions from traditional generics manufacturing into the global innovation ecosystem. Stocks to play globally include Amgen and Merck. Kevin, you own Amgen and Merck.
Yeah, both are down over the past 30 days. I agree with the call. I think there's a play here. We rotated into Merck when we got out of United Healthcare. It's up nicely. We know they're going to lose Keytruda. Amgen made acquisitions that we think are very accretive to the bottom line. I'm not sure how aggressively you want to pile into this trade over the short term, but we like it intermediate and long term a lot.
Joe T, Welltower, target at 185. That's $10 higher than it used to be, and overweight at Wells Fargo.
This is a REIT. This is senior housing and acute care. We got into the stock July of 24 at $111. It has rewarded us. I think it continues to move higher. They are situated in a perfect industry in a demographic that only continues to get more and more.
Costco reiterated outperform today, tells the advisory group. $1,100 is the new price target. They expect solid August sales results. You own that one too.
Costco and Walmart have really struggled here over the last 30 days.
Why is that?
These are two names. You know what? It's interesting because my response to your question is going to be purely exhaustion. Exhaustion and positioning and sentiment that got to an extreme. One could make the argument from the valuation perspective, they're expensive, they're beyond their 10-year average. I get it. Walmart's like 34 times. I think Costco's 47 times. But these have been the anchors of, quote unquote, being safe havens over the last 5 years. Over the last 5 years, they both have outperformed the S&P 500. So I think it's nothing more than a situation where they are exhausted. They're now teetering on being
almost
unchanged.
50 times
Yeah.
forward for Costco.
It's literally, they're teetering on being unchanged for 2025. And I think what that really does is it challenges the overweight positioning. I think you're going to have to see some liquidation here of ownership, and that might mean that there's further downside ahead.
You're willing to pay a bit of a higher premium, obviously, for the recurring revenue model.
And the safety, right? the safety itself.
49 times.
Can we get technical real quick? Costco head and shoulders pattern potentially. There's a lot of support at 900, but if it gets below 900, this could end up showing to be a bit of a crowded name and see some heavy selling below 900.